Good afternoon, everyone. This is your analysis for tomorrow's November 2nd, 2022 session. Tomorrow is FOMC, and I will not be trading it just because I think the action we'll be getting will be a little bit outside of normal expectations. Trend trade moves may not have the expected follow through, and mean reversion just might be a little bit too slow for me. So I will be avoiding trading tomorrow. So what did we have today? Let's just go to the RTH for a second. Hide the indicators, and even let's hide the drawings too. Let's hide all this. So we had Monday's session be inside of Friday's upper half of the range. So Friday's session ranging about 100 points, I believe. Yeah, from 39.18 roughly down to 38.30, 87 points. And let's pull that back up for a second. So you can see we spent Monday just holding that halfback on the day, that kind of 72-ish area. Now today we gapped up, and instead of following through, what I was really looking for was a gap and go scenario. And we can see during the RTH, I had written as a plan that I was looking for acceptance over 95, kind of this spot here, to give us a move into a break over October's highs. And that is what we had. We got above 95, and we slowly but surely crawled our way to new highs, breaking October's high of the month, which is sitting at 16.5, and we opened the RTH at 24 quarter, I believe, was the high of the day today. So instead of getting a gap and go scenario like you'd like to see there, where you had a nice digestive Monday session that held that Friday mid at 72, instead of Tuesday getting that nice gap and go into this balance low at 42 and maybe targeting that Q3 POC or Q3 half in the 60s and that balance high at 77, instead of getting that move into, let's call it above 39.60, we had a full retracement downwards. We sold off after churning. We sold off aggressively, came back inside this 39.07 area, came back below 95, again 38.95, corresponding with the second half of the year's VWAP. So we fell below that, and I was long for a quick long off of 75 after the look of below and fail, so that worked out well. I did miss the short at 94.75, I believe. It was just a little bit too slow on the gun. I think it was right there. We did have data coming out at 10 a.m., so I was waiting 1 minute, and then I was just slow to hitting the button. 94 half was the short attempt. I was just a little bit slow on hitting it, so I did miss that. And then the rest of the day, we just spent churning below the 75 number. 75 quarter lining up with the first half of the year's value area low. So we fell out of this high time frame value, 85 being our last week's value area high. So we fell into last week's value area. We fell below the first half of the year's value area low. We fell back inside of Monday's value area. So in general, we kind of lost all that momentum we would have wanted to see in Globex. So what am I looking for tomorrow? Again, I'm not trading tomorrow, but this is what I'm looking at. I've gotten rid of that 95 spot just because after a balanced day like this, I don't want to fade the momentum. And that's what I was looking for today as well. Coming into the day, I wanted to not fade. I didn't want to be short at 42. I would have rather gone with the move. Luckily for the '07 number, I was looking for the gap close before hitting it long, so I did not get that trade in. But today, once again, or tomorrow, once again, I will not be fading this churn. I will be short, or if I was trading it, I would be short at 75 quarter and short again at 34. I'm aware we might catch a bid at that 46.75 number where we had our major bids show up on Friday's ramp. You can see it right here. But again, I just don't want to fade this accumulation of inventory. That's from roughly 10:30 until the end of the day. That's a lot of time spent churning. Instead, I would look to go with the break and look to short 34, possibly short 46.75. Below, again, once again, I would not be trading this 38.25 and lower numbers. I just think we've got to clear out some of this wackiness due to earnings, and I wouldn't be surprised if this all kind of fell apart. Of course, all of this is going to be dependent on what the Fed decides to do tomorrow. If they hint at a 50-point hike instead of 75, or God forbid, a 25-point hike, this thing will be ramping up, and you can ignore all of this. So in general, I will go with balanced rules, which is to go with the direction of the break, not look to fade it, not look to sell 94s like I was today. Instead, look for places to get long, probably somewhere in this 39.0175 to 11.75 area. Perhaps 24 quarter has been a nice spot. Perhaps taking that at 42.5 is probably going to be great. 77 may be the extreme fade, but again, I would caution against trading tomorrow in general. And if you do, I would try and go with the direction of that break, and I would likely be flat by about noon, when volatility and volume is likely to die off. Hope that helps. If there are any adjustments to this, as usual, they will be made to Twitter pre-market. Other than that, trade safe and have a great day.